So we realized that we had a good business and had a lot of cash, but the investors valued the cash at zero.
Yeah.
And they valued zero growth at zero. And then we started asking the question, why is it that the world values excellence as zero unless it's hyperbolically hyper-growing or parabolically growing? And why does the world value $500 million at zero? And that got me thinking. And what I realized is cost of capital had gone from 8% to 20%. And they were discounting the cash. And the assumption was $500 million of cash is going to be worth nothing in a decade. And I thought, that kind of scared me. And the next thought was, if you can't grow your company 20% a year, it's worth nothing. Well, okay, so why is it worth nothing? And the answer is because the currency is collapsing. And so once you understand that, then you realize you've been put in this quandary by fiscal policy, which is if you have a company and you can't grow at 20% a year, you're going to fail. And then you realize that if you're an employee, if you're working for a living and you're not raising your salary 20% a year, you can't keep up. And once you realize, and then you understand why. Once you realize the why is because we're discounting the cash flows at the risk-free rate of 20%, and at a discount rate of 20% or more, nothing works. That causes you to realize that the only strategy for survival is to become asset rich. And of course, we saw that with the K-shaped recovery. Every Wall Street finance company had the best year of their life, doing very little, right? Like if you'd done nothing and just held the S&P 500, you're up 35%, which is like the best year in a decade, doing nothing. Okay, and then every Main Street company had the worst year of their life. If you manufacture things with manual labor and people, it was a horrifically difficult year. And if you did nothing but held stocks, it was your best year of your career. And so once you understand that, you realize that you can't succeed in business. And by the way, you can't succeed in life if you don't actually create an asset portfolio of high quality assets that will appreciate in value faster than the rate at which the currency weakens. That's the epiphany. Right, and it had been building up for a decade, but your frustration. If you feel like, well, everything's getting 7% more expensive every year, you can imagine you're going to get a 7% raise, and maybe next year will be better, and you'll get the double raise. You keep hope springs eternal.
Right.
But when the cost of capital goes to 21%, and then you think it's going to go 21% every year for the next 10 years, at that point you realize, no, this is hopeless. And so I think we were just in this situation where. Our stock was it went down to $90 a share. We were in the tank. It was at $120 a share. The company's valued at 1 times revenue plus cash. And if you ask any investor, well, why do you hate us so much? You're not growing fast enough and we don't value the cash at all. Okay, well, I guess you can basically rail against the investors in the market and say, they're stupid, they just don't get it. Or you could say, well, maybe they're trying to teach me something. Maybe I need to learn. This is a learning moment. And so I guess we got to the point where in the second quarter, we realized we were never going to need that cash to grow the business. The rules of the game had changed, and you couldn't use money to grow the business. You can't use brute capital, nor can you use brute labor in order to grow a manufacturing company anymore. And then we realized that the cost of capital had tripled, and it was just going to boil off to nothing in any event. So simultaneously, that was kind of like permission to do something different. Maybe permission plus instigation to do something.